What is going on, guys? It's Mimic Trades here, and I'm bringing you another video going into some stock and cryptocurrency trading. So this week we're going to be looking at a couple of trades that I made this past week, specifically American Airlines and NIO. And we're going to be looking at the thought processes behind these trades and how they were profitable and why I chose these trades. Now you can see my account value is currently at 1433. I started back in July of 2020 with $200, and then I added another $200 somewhere along the way when I hit like 500. So once I already did about a what is that, like 150x, or sorry, 150%, then I added in $200 more to help me trade more and help me have more capital to play with, and I'm currently up 442%. Now, this isn't my first account, so don't think that I'm just some god that came out of nowhere. But I've been trading for a couple years now, and I decided to open this account back in July and see what I could do with it. So we're going to look at my first my American Airlines trade that I made last week. So as you can see from here, I bought 6 $23 calls for the 28th of May, and I bought them at a limit price of 0.78, so my break even was $23.78. And then I sold 2 of them at $1.18 and 4 of them at 97 cents. So I sold 4 for about a 25% gain, and then I sold 2 for about a 50% gain. Now, as you guys will see, I actually could have sold all 6 of them for about 100% gain, but you know, I like to play it safe. I like to take profits when I feel that, you know, the stock is either gone up enough or I'm happy with it. So we're going to be looking into these trades and seeing exactly what I did. So first off, we're going to look at the weekly chart of American Airlines. So as you can see, I drew a vertical line where I bought the calls, just so you can see everything that, all the information that I had going into the trade. So keep in mind, this weekly candle, you're seeing this in the future, right? You're looking at hindsight, but this weekly candle, when I bought, it looked more like this. It looked like this one. So it was basically a duplicate, right? And so based on that, just for one, when I'm looking at this chart and I see 2 of these type of candles back to back, I knew that it had to fill upwards. Or if it didn't fill upwards, I mean, I knew there was a very, very large chance that it would fill upwards. And if not, that would actually be a very bearish indicator if I had 2 of these green candles back to back, because that would say that it's getting rejected off this $24 level, right? But I was looking at the weekly candles and I saw 2 of these and I figured, okay, it's gonna fill, right? So then we go and we look at the daily candles. Let me just delete this drawing real quick, just so it's out of the way, make it nice and neat for you guys. So for the daily candles, we're actually going to go a little bit more in depth to see exactly what I was looking at when I bought it. So considering that I knew that the weekly chart should fill upwards, right? We have this nice little pattern where, you know, we're below the 50, we come up above, and then come below, come back up, retest upwards, and then retest downwards. Now this retest downwards is crucial, because with this retest downwards, then I knew it could go back up, because, you know, we've built some stability in this range, and it doesn't seem like we're just gonna go up here and then just plummet. So I was looking at American Airlines towards the end of the day on the 25th of May, and I saw that it went up, and then I saw that it went back down, and I was looking at it and I was thinking, you know, this weekly candle has to fill upwards, and we've already built some resistance in this area. We kind of dropped back to it at the very end of the day there, and you know, there's a lot of resistance in this area, so I doubt we're going to crash through there. So I bought the calls there, and okay, so I bought the calls there, on this little red candle. And then if we look the next day, it started filling upwards. We got an instant green candle up, so I knew that that was a little bit of confirmation bias telling me that, hey, you made the right decision to buy right when it dropped below the 50. And then, you know, from there, it just took off. And I ended up selling right here. And I sold the day before as well. So let's see, 27th of May. Yeah. So I sold 2 of my shares here because it was breaking out to this new level. And, you know, I didn't know if it was going to test this level and then come back down. And my call was for May 28th. So something that you guys should learn if you, or should know if you're ever going to trade options, is that you don't want to sell on the day it expires. Typically because, let's say it had opened downwards. If it had opened here, I would have lost all my profits. I would be back to selling my calls at, you know, like 82 cents maybe. And that's just not a risk that I'm willing to take when I'm up 50%, right? So you want to take profits before the expiration date, especially if you're playing weekly calls. And so I sold my first 4 calls right here when it came up to 24. And so I sold those for a 25% gain. I was happy with the gains, and I knew I only had 2 days left on my expiration, and I didn't know if it was going to go back down, retest this, or even retest below it again like it's done in the past. Like this, you know, it builds this little layer, comes back down, retests, and then comes back up and breaks through, right? So I didn't want to chance it and have that process repeat itself. So that's why I sold 4 out of my 6 calls here for a 25% gain, because I wanted to play it safe. And then I kept 2 of my calls because I figured, okay, even if it does go back down, right? Let's say it goes back down below where I bought it, because I bought it at 23.78. So if it goes back down below where I bought it, my profits from selling here would have covered these losses from it dropping back down to this blue line. But you know, that's not what ended up happening. It ended up going up, and then I was watching it. I was waiting to get out because I knew that I didn't want to sell on the 28th of May. And so, you know, with like 40 minutes left in the market, I decided to sell at 24.20, and it ended up actually going all the way up to about 24.50. So I probably could have sold at that very top with a 100% gain, or even the next day on the day of expiration with over 100% gain. But you know, we like to play it safe here. We are looking for consistent gains, right? We're not looking for crazy percentages all the time, and especially with options, it's really easy to make those crazy percentages. Like I made 25% just from writing it from around here to like up here. You know, that's a very small difference in price, 23.90 to 23.30. Very small difference in price, and yet with options you can make huge gains. 25% is very nice for a single day, and then, you know, 50% if I waited a little bit longer for the day after, right? But so I played it safe, I stuck to my rules, and you know, it ended up exploding after. So if I had bought calls for not the 28th of May, but the week after, I would have made quite a bit of money. I probably would have made around 200x, right? But so the big thing with this trade was looking at these weekly candles. When I saw that this candle looked like the previous one, I knew it would fill upwards. And so if you guys want to start learning candlestick patterns, I would definitely go look at this Investopedia page. It shows you different types of candles and different types of patterns and everything like that, right? But it's good to have that knowledge of candlesticks, but also you need to have the experience. So like with this, it's not like I knew like, okay, this candlestick pattern, like these 2 candles before, then means it's going to have 1 green candle up. No, I just looked at the current candle that it had, and I knew that it would fill upwards because of experience. And so that was a pretty nice play. So then we're gonna go look at another trade I did last week with NIO. So I did the same thing where I marked where I bought, and then you can see what happened after, right? And so basically for this one, it was a very similar play. If we go look at the weekly candles, we can see, okay, it came down, retested this 50 for quite some time, right? And then it broke through the bottom, and then it had a green candle after, right? So again, candlestick patterns, huge right now, at least for this weekly chart. So when I saw this green candle showing that, you know, it took a bottom here, and now it's trying to climb back up. And also, if you look at the MACD here, the MACD was just coming in ready to start roaring. And then looking at this candle and seeing, okay, at the time it looked similar to the American Airlines candles where, you know, we have, let me just draw it real quick. We have some big candle like that, and then we got, you know, the bottom. And so looking at that, I knew again that it would fill upwards. Let me just delete this real quick. Oh, what? Okay. Oh, hello? What am I deleting? Oh, I think I'm just drawing again. That's my bad. Okay. Anyways, now that we've got this squiggly little line out of there, we'll go a little more in depth. And so for this trade, I bought right on this blue line. Again, similar to the other one in terms of it going down, coming back up, and then coming back down, retesting this bottom, making sure that there's resistance there, or support rather, and then retesting upwards, right? And so another reason that I bought this was because if you look, the 50 had been below the 200 for a while, and then, you know, it creates this resistance down here, and then the 50 breaks above the 200 right here. So when I saw that the 50 was breaking above the 200, that's very bullish, and that on top of the weekly candles, I was looking at this and I was like, you know, this is a buy. That and also the MACD here on the 15-minute, probably the 30-minute as well, it was showing me, hey, this negative momentum is decreasing. It's decreasing rapidly, and we're probably going to have some explosive growth in the near future. And so I ended up, I believe, selling my NIO calls. Let's see. So yeah, I bought the NIO call at 237, and I sold it at 355. So I sold it when the stock price was around 36.50. So I believe I sold on this jump up right here, and you know, I was happy with that. I think my expiration for those was also the 28th of May. Oh no, it was actually the 4th of June. So I could have rode this out, right? I could have rode this out, made extra profit, but you know, as we say, you take gains when you're happy with them. You don't want to risk it. Oh, and that was the other big reason that I took profits here, was because when I was looking at this 4-hour candle, it was filling directly up to this 50 EMA, right? And so I didn't want to take the risk that, let's say the next candle was like this, but it filled back down, right? Or, you know, it could have filled downwards and then gone sideways, but I didn't want to take the risk that, you know, this wasn't the bottom. And now looking at this, this even doesn't look like a bad time to buy now if it, let's say, like retest this $40 level. But at the time, you know, we didn't know that that was going to happen, right? We're just looking at this. And so looking at this, I can see that it's made some resistance in this area. And I believe the daily candles were also looking rather nice in terms of momentum. Yes, if you look at the daily candle or the daily MACD, you can see that the negative momentum has been weaning off here. It's been forming some support in this level. And then right when on the day I bought was the first green day of this MACD. And so that's part of the reason why I knew it would push up. But yeah, the reason I sold was mostly because, you know, we can't see the future here, but I sold here because when it fills up to this when this 4-hour candle filled all the way up to this yellow line, it was just as high of a possibility that it would get rejected off of that, come back down, and, you know, do something where it drops back down to here and then goes sideways again at, like, I don't know, maybe $26, 27, somewhere around there. And so, you know, just taking profits when you are happy with them is definitely a huge thing. But you know, here definitely could have waited and made some more profit, but again, it was also filling to the 200 on the daily. So it was a lot of dynamic resistance levels that it was hitting when I sold. So I figured, hey, this is a good time to sell because you don't know if it's going to get rejected off of these dynamic resistance levels and go back down. And so that was my thought processes behind those two trades. And, you know, those two trades have actually been some of my biggest trades. If you look at my P&Ls, we have American Airlines with plus 480 and NIO with plus 119. And so this is just showing you guys how to trade a small account. You know, you don't have to be making huge gains. You don't have to be making more than, I don't know, 80 bucks on a trade, 50 bucks on a trade. The biggest thing with small accounts is that you need to see every win as a win. And once you start seeing every single win as a win, then you'll be happy with your gains no matter what they are. I mean, in the beginning of this, when I started with 200 bucks, I was happy with my, you know, like $5 gains here. Like, I was stoked, right? And so the same thing happens when you end up having more money. You need to be stoked with small amounts of gains, and just be happy and ready to sell when you think that it could go down, right? Like in this case, like I could have held and I would have made more money, right? But was it the smart decision for me to hold when the stock price just bounced off of two dynamic resistance levels, the 200 on the daily and the 50 on the 4-hour, right? Would that have been a smart decision for me to hold going into these large resistance levels? And the answer there is no. You know, because even here it did retest, right? But in general, it would not have been smart for me to hold through these resistance levels in case of a rejection. And so this is especially true for short-term trading. You know, if you are doing more long-term trades, like let's say my calls were for, instead of June 4th, let's say it was, I don't know, not April, sorry, like August, right? Then definitely I would be holding here, unless it did get hard rejected, and then I would probably end up selling with a slight loss. But overall, this is the trades that I made last week. I made some nice gains. You know, my account jumped from, oh boy, I don't even know. Let's see. Went up like 400 bucks last week, something similar to that. So pretty nice gains. I'm up currently 442%. I can't wait to make that go into the 600s, 700s, maybe even 1,000% gains. You never know, right? So good luck to everyone, and, you know, keep trading.